Hi, greetings from Ardra on the west coast of Ireland. It's Tuesday today. My name's Clive. I'm the chairman and founder of Yachting Financial Solutions. I'm sure some of you know that. And why am I talking to you today? Well, the world is in probably an unprecedented state, certainly perceptually for most of us here. And we felt it was time to reach out to all of you and see how we could help you make some serious thoughts to occupy yourselves over the coming weeks and months on two issues. Staying alive and staying healthy amidst this epidemic that's plaguing us, and also keeping your finances alive and healthy. We think both these things are important. And let's go to the first thing straight away. Covid-19 is around us. We're very lucky here. We're 10 miles off the Atlantic coast. Our nearest neighbour is a kilometre away, and hunkering down here to work from home isn't too difficult. In fact, I suspect for many people it's not that difficult. It's just a change in habits. And maybe sacrificing going down the pub and things like that is probably a good thing to do to avoid getting sick. This is a kind of war, and last week Teresa and I were at a friend's house in Normandy with a group of people, and we took the opportunity to take a walk with our dogs along the invasion beaches. You know, just 80 years ago, nearly in my lifetime, people were dying out there to make the world the way it is today. Nobody's expecting anybody to go out and fight today. They're expecting people to use common sense, stay at home, restrict contact, be sensible, and we can weather this storm. Fascinating, you know, in 1918, just 100 or so years ago, was the biggest flu epidemic ever seen. It infected 500 million people, which is about a quarter of the population of the world. 27% of the world population was infected by it. And tragically, 50 million people died. Gosh, today doesn't look so bad after all. This could well be over within a month or two. So there's short-term pain for long-term gain. And the benefit to you has got to be obvious. Please try and stay away from other folk and look after yourselves. For those of you at sea, more difficult, but the isolation must be easier to a great extent. Listen to what people say. Governments around the world are taking appropriate action. Some of them, including possibly the UK, seem to be some way behind. We believe it is time for you to act and take notice of this. And please stick with us, because we want you to win over this, and we want to see you on the other side of this too. That's why we're here. That's what we're doing here. So I guess I'd better talk about the financial stuff. And you know, I've been doing this for nearly 40 years. In fact, over 40 years now, I come to think about it. And my sort of closest colleague in this area is Glyn Owen, who's the chairman of Momentum Asset Management back in the UK, in London. Glyn's the same age as me. He's been doing this the same time. We talk on the phone most days at the moment. And yeah, the other day he said, we've been here before, haven't we? And you know, folks, we have. Financially, we've been here before. Okay, the cause is different, but financially, we've been here before. Please remember that 80 years ago, as I was talking about, we were in the middle of a world war. 100 years ago, we were just coming out of one, and the biggest flu epidemic had ever been seen. In over that period of time, financial markets have coped and taken care of people's money. Actually, if you left money invested throughout these periods, you'd have made money. The scary bit is trying to take it out at the right time. Long-term investment has always proved to be exactly what it is, long-term investment. In fact, one of my heroes, Warren Buffett, says, all investment is long-term investment. There is no such thing as short-term investment. So it's the long-term view that's really important here. Yes, it will look scary. Very scary. Here's a graph that I'm going to show you when you get up the slides up, a market cycle. Sorry about digging under there. This, okay? It's a kind of panic graph, because in every cycle in the markets, whether it's a big one like this or a small one like the others, these things happen. There's kind of, oh, you know, you start off thinking it's awful. And then you get to disbelief when things start getting better. You know, this is a sucker's rally. And then there's hope and optimism, and the market starts rising. and you get to euphoria, gosh, I'm a genius, I'm going to make everybody rich, and then that market falls. Complacency, we just need to cool off for the next rally. Anxiety, denial, panic, capitulation, anger, fear, depression. Just look at this graph again. Disbelief, hope, optimism, relief, thrill, euphoria. The market's just gone through its biggest ever bear market, longest ever. Complacency, anxiety, denial, panic, capitulation, anger, depression, followed by disbelief as we move into the cycle. Oh, guess what? If you actually look at this graph, it's the same thing happening all over again, isn't it? Every time the market falls, panic sets in, people think they should be getting out, and they are actually about to enter the next phase, is when it starts getting better again. Let me reiterate that. They are about to enter the next phase when it starts getting better again. Because here's the thing. If we actually look at markets, here's another one. This is the S&P for the last 10 years or so, since 2008, major fall. Just around 40 different major crash points, even more that you can see along here. And every single one of these is where investors were going, golly, the market's fallen big time, I need to get out, I need to get out. And of course, if you look at each one of them, they're immediately followed by a bounce point. By, oh, we've reached the bottom of the market, we're going to get back up again. If you are not in there, when that happens, you cannot possibly make that gain. Let me repeat that. If you are not in there, when that happens, you cannot possibly make that gain. You have to be invested to make that gain. And even if you look at this, wow, this is over the 10-year period. Imagine what this looks like over a 20-year period. Most investors need to think for a 5 and 10-year horizon. It's something we preach here at Yachting Financial Solutions. So what's going on out there to make sure that it's okay? Well, here's the point. If you're invested in one action, maybe you should be taking some, maybe you should be worried about that. It's like betting on one horse. Yeah, that could fall. But fundamentally, we believe that people should invest in funds, and even more so, portfolios of funds, rather than stocks in any one company. Let me repeat that. Funds rather than individual stocks, and better yet, portfolios of funds. So if you like, funds of funds. Why? Because a fund manager's job is to make you money. That's all he's interested in. A fund manager will have a team of 20 people behind him. It won't be just one guy in a laptop. 20 people or so behind him, making sure that he is taking advantage of all their research and getting the best out of the market that he possibly can, even in today's situations. Now, what does that really mean? Well, each fund, take an average stock market fund, is going to have 100 to 200 different stocks inside it. And even if you only had one fund, that's 200 different things people are looking at. Very few of our clients have one fund. We tend to preach a multiple of funds, and better yet, most of our clients use a momentum harmony portfolio, which is effectively a fund of funds. So we can see that that is going to give them the biggest possible spread they possibly can get. More companies. Think about it. If you've got 5 funds with 100 different things in, that's 500 different things. If you've got a momentum harmony portfolio, Momentum work with 200 different fund managers, usually have about 40 to 60 in their portfolios at any one time. So that's another, 6,000 pieces of action you've got. The spread is the key issue here. These guys are looking after this money for you on a daily basis. For example, last week, you probably heard on Sunday, the Fed dropped 500 billion. We had asset managers that we work with at Harmony buying funds on the Friday, which recovered very well on the Monday. Yes, we may have fallen again, but this will continue. The market is resolute. Donald Trump is due for re-election. He needs the stock markets to recover. He will pour every dollar into making sure these markets recover for your benefit. But you have to stay in. These are not reasons to sell. They are reasons to stay in. And this is generic. Doesn't matter whether you're investing via Yachting Financial Solutions or not. If you're invested, you must stay in. If you're not invested, this has to be the best possible opportunity you could have seen in the last 10 years or so to get in. Both Glyn Owen and I agree on that one. Yeah, this is a tremendous opportunity to get. If you've been sitting on the side, this is the time to get in. Oh, and if you're funding money into the markets on a regular basis, whoopee-doop, you are going to be buying at some of the best possible lows. Fantastic opportunities, really going. What else is going for you? All these professions are currently buying recovery stocks. What are they? Stocks that will grow the fastest when the market recovers. That's what you need to be in. You need to have the professionals working for you. You can't step out, wait for them to do the work and then step back in. It will have been done. You will have lost out. My information says there were 31 stock market corrections since 1980, and all of these, except for the current one we're in, have been erased by subsequent bull markets. In fact, in the past 31 years, there have been over 3,000 days of bear markets. In other words, the market's been down. But correspondingly, there's been 8,500 days of upcycle. Draw your own conclusions from that. So, diversification is the key. Having good managers work for you. The guys that we pick to work for you are great. We don't do the work, they do. We don't believe in telling them how to play the game. We picked great players, great team managers, if you like. So, you know, we can all get out of this. Frankly, I've spent most of this time talking about the money. The money's the least important thing, isn't it? Yes, I know it's important, but aren't you the most important thing? You need to make sure you're safe. You need to make sure that you look at, follow, especially the guidelines. Here in Ireland, people say it's been draconian. The pubs are shut today. It's St. Patrick's Day. Bloody good thing, in my opinion. Bloody good thing, in my opinion. I'm self-isolating on about a square mile with one other human being and 2 dogs and a horse. And I intend to stay that way for a while, so I'm around to help you guys look after your lives and your money. Vital stuff. So please, please stay safe. Because, you know, what will really crucify us, I have dropped something here, I have to pick it up, is this. It's all about fear, isn't it? You know, fear has 2 meanings. F-E-I-A-R, fear. We are all frightened. Fear. F-E-A-R. Forget everything and run. Where to? Or face everything and rise. I think this is our opportunity to do the second, don't you? To come out of this and look at each other sometime in the future and say, glad we had that conversation. Glad we had that conversation. You know, Lenin of all people said, there are decades where weeks go by without anything happening, and weeks where decades of happening happen. I think we've just had one of those, and we're going to see some more of it. But, gosh, stick with it and don't be like all the people that died of Asian flu in 1918 by actually going out and mixing. Huge amount of people. Go and look at the statistics. You'll be amazed how many people died in the world during the flu epidemic of 1918. We are way better prepared for this than we ever were for that. And then, if you'll excuse me ducking down a minute, I've just got to pick up the last thing that I dropped. Oh, getting old, you know. Here we go. On the beaches the other week, I couldn't help but think of another one of my great heroes, Winston Churchill. And there we were, you know, where the Americans landed and further south the Brits landed. And my dad was busy flying a Spitfire at the top of it all. And, you know, Try this. There is a tide in the affairs of men, which taken at the flood leads on to fortune. Omitted, all the voyage of their life is bound in shallows and miseries. On such a full sea are we now afloat, and we must take the current where it serves, or lose our virtues. Churchill said that in Britain's darkest hour. Boy, was he right. We got there. We can still all get there. We can still all get the other side. By the way, another great Brit wrote that. It's from Shakespeare's Julius Caesar. So, thanks for spending 15 minutes with me, longer than I expected. I hope you found this useful. We're going to open a video link, well, actually a conference link, for anybody out there that wants it. You don't have to be a YesSol client. Just want to talk about this? What's going on? What's happening with your money? Things that we found out from other people? We're going to send you a link, schedule a 30-minute call. Either myself or Teresa will be happy to sit down with you and help you work through this. We're here for you. We want to see you on the other side. God bless, Godspeed, keep safe.